Greetings, members one and all of the Salivation Nation. Gold has peaked. It's all downhill from here. Let's explore. Now, I disagree with that statement, but let's see exactly what ABN AMRO has to say about this very interesting piece here from Kitco. And it is interesting to different viewpoints. How most people are pretty bullish on the precious metals for 2021, myself included. Which I think is part of the reason why I disagree. But let's see what the reasoning is behind this opinion. The gold market struggle since the start of the year in the face of a stronger U.S. dollar and higher nominal yields could be a harbinger of future weak price action in 2021. So there we go, according to one bank in particular. In a report published Thursday, Georgette Bowl, senior precious metal strategist at ABN AMRO, or AMRO, adjusted her outlook for gold, saying the price has peaked. Yes, she noted that gold's bullish environment has deteriorated sharply within the past month, and actually that was predicted as well. And I talked about that in a prior video. Bowles said that she sees the gold market struggling this year, as rising inflation will force the Federal Reserve to tighten monetary policy faster than investors are expecting. Well, I wouldn't bet on that. The Federal Reserve has not been one to really, in fact, I think if anything, they'll find some other way. But my guess is the rising inflation will, at the time it gets too much out of hand, there's not much the Federal Reserve can do. At the same time, improving economic conditions will help push nominal yields higher, which in turn will raise real interest rates, another significant headwind for gold, she said. The third factor weighing on gold will be a stronger U.S. dollar, and I don't think that's going to last for too long either, especially since talk of stimulus has increased again, and by all intents and purposes, we're going to see that extra $1,400 be released soon, and Biden has already proposed a $1.9 trillion relief package. It could be that a period of higher core inflation later in the year convinces some FOMC members that they are at the point of on track to overshoot 2% for a time. We talked about that before too. In fact, some are normalizing a 2.5% inflation target. In that case, we could well get our first hike in 2023. I don't know if that I would bet on that, but really that doesn't change the calculus from what the Federal Reserve has been predicting, that they would not even think about raising rates until 2023. So that's really not much sooner than previously expected, unless we're talking about early in 2023. Meanwhile, 10-year U.S. real yields have declined beyond the 2012 lows. We think that inflation expectations are toppish, as we are no longer expected to decline in the 10-year U.S. nominal yields. U.S. real yields will improve. With ABN AMRO seeing three major hurdles for the gold market, Bull noted that the market is a little overcrowded. She noted that there is a risk that the precious metal could see a sell-off similar to what happened in 2013. In 2013, liquidation of 36% of the total outstanding ETF positions resulted in a decline in gold prices of 30%. These positions remain a risk, she said. Since the peak on the 15th of October, they have declined by only 3.5%. But 2013 was very different than it is now. In fact, we had just gotten out of the recession, and we knew we were out of the recession, and we were starting this long, slow recovery at that point. Now here, we are at the beginning of a recession, and though we may see some economic activity be stimulated once the vaccines distributed once the virus is not as much of a threat as it is now. But even as such, we really haven't seen the wake of what has happened last year on the economy to some extent. Even though I do believe we will see some recovery in some areas, it may just be spurts of it. But make no mistake, the all the stimulus that has been injected into the economy will come back to bite us eventually. In fact, the stimulus that was injected in the economy after the 2008 crisis really still has not yet come back to bite us in the way that many thought was supposed to occur long ago. So we're piggybacking on two scenarios that we're still waiting to see the repercussions of. The only repercussions we've seen is the debt clock. And it's, pushing $28 trillion now. Deficit spending out the window. It's crazy. But, they can keep doing that until they can't keep doing it anymore. And that's going to be the point where people lose faith in the dollar. I'm talking about the 60% of transactions around the world from other nations, are in the dollar. When will they lose faith in that? Who knows? We'll find out, I guess, soon enough. Or maybe not soon enough. Maybe we have more time on our hands. Maybe that's what they're betting on with these predictions here. But I don't think it can go on for so long. Bull says that her best case scenario isn't that there is the potential of another mass exodus in the gold market. Real yields are still negative in a large number of countries, so that should give some support for gold prices. Moreover, investors remain concerned about the large fiscal deficit. These factors should dampen the downside if gold prices a bit. To new forecasts, ABN AMRO sees gold prices averaging the year at around $1,771 an ounce, down from its previous average of $1,951 an ounce. As for gold's peak, Bull sees it happening in the first quarter, calling for an average price of around $1,800 an ounce. The Dutch bank's latest outlook comes as gold tries to generate consistent momentum. February gold futures last traded at $1,873.90 an ounce. So there's kind of where we're at. This little yellow metal here, it's kind of perplexed the markets and moved in wild movement upward. And I can certainly understand the sentiment that it does seem overvalued. But that being overvalued really occurred in July, August of last year. I think the prices kind of are normalizing kind of where they're at right now. And I still think that we'll make another move back upwards in the year. I'm still bullish on gold prices myself. We'll see if it plays out. I could be wrong about that, just like I could be wrong about silver. But nonetheless, this metal that has, it is the ultimate hedge against economic instability. Will continue to serve as such. And now, if the prices do go down, I can only hope that would be the case, because I'd love to be able to pick up some more. But my guess is there's just too much happening now, too much uncertainty to come in the markets for them to stay kind of where they're at. I'm seeing them strongly going back over $1,800. But it's going to be interesting to see. But this is the first prediction that I've seen, a major prediction anyway, to the downside, saying that this is it's all downhill from here. I don't think so. I think that it's going to stay in this area and maybe go up more from where we're at right now. And that is not wishful thinking, by the way, because my wish is that it would go down some more. But I think the peak last year, well over $2,000, is one that we kind of thought, this is a little bit premature. This is probably a little bit of a slight bubble there, and it did normalize back down, but it has stayed up fairly high here, well into the 1850s. And so, I think that it's probably finding its niche right now. And it's down a little bit, but I think it's going to creep back up a little bit. And my guess is probably by summertime, we'll probably see it averaging around $1,900 again. I would not be surprised. In fact, I would not be surprised to see it test the $2,000 mark by then or later in the year. A lot of things can happen. I believe that things are more fragile than most people think out there in general economic circles. And so they can make predictions like this, especially some of these banks. But we'll see how it plays out. Really, no matter what happens, though, with the price of gold, you and I, we accumulate it and take advantage of these dips when it goes down. And we hold it for the long term as a way to protect ourselves against economic instability. And I believe the demand for gold is strong as a treasure, as a way to protect ourselves in these times. And I think that as we see it rise, even as we see it fall, we will just hang on and be diligent in our pathway to preservation of wealth. And that's really what it's all about in the end. But while we have it, we might as well just enjoy the beauty of it as well. And it is a beautiful metal for sure to behold. It packs a lot of value in a very small space, allowing you to efficiently have a store of value there, and to protect yourself there. And so there you have it, among other things as well. Obviously, too, you want to protect yourself with other measures. A food storage is something that I've been strongly thinking about, and other areas of preparation, including a way to protect yourself, and water, shelter, all those types of things in case of emergency. Any kind of emergency, no matter what or for how long. So there you have it. So post your thoughts in the comment section below about what do you think of this prediction. Do you think gold has peaked? I don't think that. Is it all downhill from here? I don't think that. Let me know what you think. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video. And strongly, as strong as the dollar is right now, encourage you to please rate, share this video, and hit that notification bell so that you can be apprised of the latest video that has been published. Comment, share, notification bell, and subscribe.